What is up, everyone? Welcome into the Theta Vault. My name's Dave, and today I'm going to go over a little bit more about my credit spread worksheet, how I actually get these numbers, and how I use it to help me make the best trading decisions for myself in the week to come. Now, usually I do this with earnings stocks, but there's not a lot of earnings stocks that I really am excited about for next week. There's GameStop, Carnival Cruise Lines, but those two really don't get me too excited. So I'm expanding my list this week to include a lot of generic stocks that don't report earnings next week, so like Tesla, Disney, Amazon, and Alibaba. Now, I've already got the credit spreads selected for Tesla, Disney, and Amazon, but I did want to make a quick video to show you how I do it here with Alibaba. So all these numbers here in my worksheet come from the Thinkorswim RTD, powered by TD Ameritrade and Charles Schwab, I believe. So I get those numbers here. Now with Alibaba, this is the options chain that I'm looking at, and I like to pick an option with about a 0.6 to a 0.8 delta, maybe even lower or higher depending on the stock. So I'll start with the 0.06 delta, and that is the 78 strike price. So when I'm looking for call credit spreads, I want my initial short leg to be at that 0.06 delta, so the 78 strike price. So I'll go ahead and we'll say 78.79, maybe I'll do a 77.78, and maybe we'll do a 77 to 80. The wider spread will give us a little bit more safety. So now to find these actual numbers and get them imported from the Thinkorswim RTD, I have these formulas that I found online that I kind of customized for my own worksheet here. Now these numbers also are from the Thinkorswim RTD. They update throughout the week as Alibaba's price changes and as the price of these calls changes. So these are both at the money calls and puts, and they help me find the implied movement of the stock. So for this week, Alibaba's implied movement is about 3%. So as I put in the price of these short legs and long legs, it tells me that the percent that would have to move is actually 8.14% for me to see a loss on these spreads. So now we'll actually get the numbers in to my credit spread worksheet from the Thinkorswim RTD. I have these formulas, and I'll show you how I do it. So I put the ticker symbol in there, followed by the expiration date of the call, followed by the strike price of the call, which at this is our short leg here, 78. So now it should update with that 0.06 delta that we saw, and it did. And then these are for the options. So again, the ticker is Alibaba, the expiration date is 3/28. The short leg of my spread is 78 for this row, and the long leg is 79. So we'll change the data here to reflect 79 for the long leg. So as you can see here, it will update momentarily with 0.03 premium, giving me a 3% gain. And the Dave score is actually pretty high. It's 81.5, not too bad. And for a 3% gain, I can respect that, even though the safety score is a little bit lower than some of my other options here. The risk to reward is high enough that it bumps the Dave score up to 81.5. And I can go over some of these scores in a different video later on. But for today's video, this is just how I do it. And these prices will all change throughout the week, just like this stock information here. So as the price of this option changes, the numbers here will change also, which will change my Dave score pretty much every 5 minutes as the stock changes. So I'll be able to see this in real time and make the best decision based on the current price of the option. So now I'll go ahead and finish this out for this other two call credit spreads here on my worksheet. So give me just 1 minute and I'll be right back. All right, guys, so I finished putting in the last two options here. And as you can see, the top one here that I picked originally is the best one as according to my Dave score here to enter in if I was to enter a spread in Alibaba next week. Now, I don't think that I will, but these numbers give me a general idea of what I could expect if I did enter into the credit spread, or sell the credit spread rather. Now, a couple of problems with this. You know, the Thinkorswim RTD, it reports back the mark that is the difference in the midpoint of the sell, the bid, and the ask. Geez, I'm all over the place today. So for this spread here, the midpoint of the bid and the ask is 3 cents, but that's also 3 cents for the midpoint of the bid and the ask here. Now, obviously, the 78 to 79 credit spread would be much more difficult to enter at this 0.03 premium than it would be to enter the 77 to 78 spread. So it could add an extra layer of difficulty if I did want to get this 0.03 premium and actually fulfill this 81.5 Dave score. So that's just one problem with this model, but in reality it's not that big of a problem because it will update all the time. So as the midpoint changes, it will change, and I'll be able to see a more realistic value of these credit spreads throughout the week. So that's a little bit of how I do it. If you enjoyed it, if you want to see more about this kind of topic, I have plenty more spreadsheets that I can go over. I have plenty of other things that I can talk about. But if you enjoyed it, make sure you leave a like, comment down below, and subscribe. And until then, have a great rest of your weekend and a good week trading next week.